Oh, sorry. Can you guys hear me now? I realized I was on mute. Okay, so I'll start over. I'm going to look at some really long-term charts here first. Okay, and then we'll go into kind of dailies, specifically some of the commodity currencies and dollar yen, and then we'll go to short-term stuff. Um, Hourly is intraday. Look at some euro and some Swiss in particular. But first, we're going to look at a number of really long-term charts. And by that, I mean each candle here is a yearly chart, is a yearly candle. Like, okay, so each candle is 1 year. Um, can really, really, really filter through the noise and see what's up. So we're going to look at log scale and arithmetic scale on both. Um, Important to look at log scale when you're looking at long-term charts, obviously, because it accounts for percentage moves. So as you get, like for example, this is on arithmetic scale. As you get down towards the bottom of 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 the chart, and a move down here in the 70s is obviously a much different move and a greater percentage move than something up in the 150s. Okay, so I'm sure that makes sense. But here's the US dollar index, the ICE dollar index. And we've had three major bull markets in the dollar, the third one being right now. Um, this one's quite different. This one's kind of like a combination, I guess you'd say, of the last two, because the one in the 80s, we really went kind of into a low and then we went straight up. But there were very sharp corrections along the way, right? You can see here, looking at the yearly candles, for example, that, for example, in 1981, market traded all the way up to 114, above 114, but then finished the year down, 1,000 points lower. Okay, so you typically get a big December sell-off in the dollar. Dollar seasonality is actually very negative in December, and we were seeing that up until, I guess, the last couple days in US dollar. But the one back in the 90s, while not nearly as strong as what we saw here or nearly as strong as what we've seen over the last 2 years, had a base that built over, a number of years. Okay, similar to what we have here. Okay, back in the 90s bull market, was really built by a base that started in 1987, kind of went, 87, and then the breakout happened in 97. In this case, you could argue that the base really started in 2004 and we broke out in 2014. So 10-year basis, 10-year basis. Difference, of course, in this instance and that instance, is that after we had a breakout, you had a strong pullback year in 1998. Well, we haven't had any sort of a pullback really in this dollar bull, right? We've had, you look on the daily chart. I mean, here we go. Let's go to the, on the weekly chart. This is as big of a pullback as we've had. Okay, this was the March high. Since then, we've gone sideways, really tight range. And now we're pressing the highs again for the umpteenth time in this dollar move. Okay. So where from here? Well, I think a few things to point out. This is log scale now. A few things to point out on the long-term yearly candle that we're looking at here, candle chart of dollar yen or of US dollar, is the market can continue to go a lot higher. Okay. We're really, the breakout last year, you could argue that this, is kind of year two of the big bull market in the dollar, with the first being the breakout year. And previous bull markets have lasted, 5 years or so on average, okay, maybe into the 6th year. At the same time, very difficult to believe that you're not going to see some sort of an interruption. And by an interruption, I don't mean like, a couple weeks to maybe even a couple months. I mean more like a year. Okay. at least something that's going to reset this. So yes, we traded sideways from March up until now. So, basically 3/4 of the year, and now we're pressing on, the highs once more. But that's what I'd be looking for. Another thing that I want to highlight, so this is the range expansion levels of 2009 to 2011 range, which really I'd qualify that as the breakout, the region that you want to use to measure the breakout targets for this. And two major levels, okay, one is the 61.8 expansion. In other words, take 61.8% of the range and add it to the high. Okay, the other one is the 100% extension or expansion, and that is take the width of it and add it to the high. And the two levels you get are basically 100, 100.08, and 106.55. This second one, 106.55, is really interesting because it also happens to be literally to the tick the 1989 high. So you've got a yearly high up there. There's also a high over here, which is pretty close in 1976. So for whatever reason, that could be a big spot. And we'll point out too that you would have a median line up there, okay, which would be the first time we would have hit that median line. That could be interesting, but you did more or less follow the lower parallel up there too. So, whether or not that pullback comes from here, which is again a level from the 61.8 expansion of the range that we broke out of, or if it comes after a complete blow off top, okay, which is certainly a possibility, near 106.56. Point is, there's probably needs to be some sort of a corrective process that unfolds. So let's look at some of the individual charts now and see if we can try to figure out if this so-called looming dollar reset, if you will, is going to take place sooner or later, as in after a blow-off. All right, let's look at euro dollar. Here we go. Okay, euro dollar. This is arithmetic scale, and you can see that we are at the very, very long-term 30-year trend line. The market obviously has come into this thing and held several times, the most recent being on the ECB meeting, in which we were down there, and then, of course, rocketed from 105-ish up to, 110? 110 plus, and then here we are now basically trading at this line. If you look at log scale, we obviously broke it earlier this year, and we find ourselves actually at parallel channel support at the low. When it comes to the euro, I would argue that the chart, because of the presence of this line, suggests that you get a correction more or less now rather than later. Okay, just because this is at support now, at least on arithmetic scale, I would put resistance at 116.40, which would end up being pretty close to the median line of this channel. Again, this would be a modified shift fork. Okay, implication being you get up there, and that would be the area you would look to potentially sell. Okay, in euro dollar. So that's a quick look, obviously, at euro. Looking at pound dollar, this is an interesting one. Again, yearly chart, okay. You hear me talk about, daily and weekly reversal levels all the time, right? Well, how about a yearly one? The yearly one would be, in this case, from the 1985 close, and that happens to be at 143.90. Okay, grand scheme of things, it's really not that far away, and it would be on a trend line. And if you look at arithmetic or log, they're really not that different in this case, and then you would have kind of 143.90 region around that trend line, which again is off of the 1985 and 2009 lows. So that would be an area that you'd expect some sort of a response in the market. Okay, 143.90. To give you an example of a yearly reversal period, look at this. Last year, the close for the high year is 2008 for euro was 139.62. The high last year in May of 2014, which was also a Draghi speech, if I do recall, was 139.93. So it's 30 pips different there, obviously on a trend line as well. Okay, so you can see really cutting through the noise on these super long-term charts. Point is, I would highlight 143.90 as a big price level in pound dollar for 2016. Okay. Mark says, do you have these levels written down somewhere? I sure do. I have them written down in this notebook that I carry around, this handy little notebook that I have on my desk. Because it's very easy to forget about them, especially when you're doing this stuff every day and you're, looking at charts and intraday charts and whatever. I do believe, yes, Mark, I will. Maybe I'll do an end of the year report that I'll send to put on the website. How's that sound? An end of year report with some of these charts and the levels that we want to watch throughout the year, maybe a couple levels for each. Okay. Yeah, so that's what we'll do. All right. Excuse me. Okay, going on. The next one I wanted to look at is dollar CAD. Holy crap, Ola. Dollar CAD. Whew. So here's log. That's arithmetic. In this one, arithmetic actually looks better because you can see that the get a lot more touches, okay, around the median line. I mean, lots of important price action around there, and we blew through this. I'm actually pretty shocked, to be quite honest, that the market did blow through. I just tweeted out about 140, the 2004 high is right there. I think it's 140.03 or something. Yeah, 140.03. And we're obviously pretty close to that. It's what we're at 39.87 is the high, and we're currently 30 pips below that. So, look, this is also why, when I wrote last night, yeah, I get, it's certainly something that's I'm watching that you could see a snapback at any moment in something like this, but you need to have a show of bearishness in order to even start, the shorting process, if you will, trading on the short side, right? And I think I wrote something like that last night. We need to break a certain level. So this is here's the 4-hour chart, and we were trading like around here, I guess, last night. And this looked like a nice place for a top, to be sure. All these wicks, okay? Well, then today comes along, and I guess the powers that be decided that dollar CAD was too cheap and had to go, through the roof, 200 points. But that's also the point. You want to let the market show you a little bit, okay, that you're on the right track. And obviously my thinking that, we were overdone and could be ready for a snapback was definitely wrong, but didn't lose any money on it because I didn't, try to necessarily, get the top, right? Rather, the idea was to wait for a break below a level. In this case, that would be 37.64, which was the high volume level from FOMC. Break below that, then you'd have something to work with, something to potentially short, okay? Until then, now we can actually probably move that up. I don't see anything here, okay? If I look at scroll back and look at, this is a 4-hour chart, but if we scroll back to everything since May, then we've got, a really well-defined channel, and you can see that we're between the two boundaries up here. So this one is a little higher than 140. It's like, depending on when we get there, if you get there, it's, obviously increases a bit each time. It's right now about 140.30. So perhaps something up there could be interesting. You get to that point and you're at a point where maybe you'd actually look for just like a 4-hour reversal or something to signal that the market is ripe for a pullback. Okay, but just be very specific in your levels when it comes to looking for a top of a blow off like this, because it can get so nonsensical. I mean, just look at dollar rand. Okay, look at some of these currencies that have just gone through the roof. The dollar's gone through the roof against them. Okay, so there's dollar CAD. Obviously, this being a yearly chart, it's would be want to wait until December ends in a couple of weeks. If we were to close around here, which is like 36.60, it's about 300 pips lower. But if we were to close around the median line, that could be interesting to start the year. Okay, because at that point you would have, a more or less a show of resistance on a very, 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 very long-term scale. And you could be looking for some sort of a pullback. Even on this chart, you could be looking down towards, say, 130 or so. Okay, which would just be former resistance. Okay, I love looking at these long-term charts. Again, just really cuts through the crap. And, I'm not saying that will happen. I'm just saying that if we get a pullback to start to, or to end the year, you have a long-term short resistance, and you treat that as a rejection. Okay, and has you looking down towards the level that you broke on the upside, which in this case, of course, would be the 2009 high. All right, so that's one of the interesting ones. Two more interesting ones, of course, dollar yen's one of them. Okay, dollar yen has actually never been up 4 years in a row. Not yesterday, what am I talking about? Monday we hit the year open. The year open was 120.39 and our low was 120.33. And here we are, back at 122.65. So we're basically trading to the tick at the highs in 2007, pretty close to it at least. And going for history, dollar yen's going for its first 4-year rally ever. In any case, this is huge trend line area. This is log scale. If you look at it on arithmetic scale, you have the underside of this line called an internal trend line. If you look at it on log scale, you have a more precise touch on the line that goes off to 1990 and 1998 highs. Okay, so again, this is pretty representative of the dollar index, simply from the fact that since the low, there's been very little pullback. Okay, as far as a big picture, outlook is concerned, right? You can look at a daily and find, plenty of pullbacks, but they're, in the grand scheme of things, they're very shallow. So we really have not had much of a reset as far as the big picture is concerned. This will be interesting to see how this market closes this year. If we can get down back to 120.40 or so and form more or less, if you will, a doji on a yearly chart, you would actually have a pretty bearish looking start to 2016. Okay, at least that's how I would go into the year looking at it. We'll look at the daily here in a little bit. Obviously, we're at a huge juncture. That's why I put out a short this morning with a super tight stop. BOJ's tonight, by the way. Okay, dollar Swiss, probably my favorite one. So dollar Swiss, actually, I think that this is going to be exceptionally bullish. Okay. Weakness since 1985, which is right here. actually is the picture perfect representation of a wedge. Okay, and what I mean by that is now a wedge. Let me read to you something from Edwards and McGee, if you're familiar with their, the Bible of technical analysis, if you will, technical analysis of stock trends, written by Edwards and McGee some 80 years ago. And here's what they wrote about wedges. Okay. Wedges, most true wedges are too short-lived, seldom longer than 3 months, to take on a recognizable definition on a monthly chart, but they may be spotted occasionally on the weeklies. Okay, so everything from here may not be a true wedge. If it were a true wedge, and once you broke above this level, which is the upper boundary, you'd actually be expecting a rally all the way back to 2.9. Okay, that sounds pretty crazy, right? That'd be like a dollar Swiss tripling. So this is more than a year outlook. This is like a decade outlook. But the point is that the converging trend lines are there, okay, and they represent basically less and less selling as you get towards the lows. Now, obviously, unless you've been stuck under a rock, 2011 and this year are both basically the result of the SNB intervention. Okay, in this case, they intervened when the market was down near 70 cents, and in this case, they dropped the peg and it came right back, the peg to euro, and it came right back. So, some technicians might say, well, you can't really take that into account, right, and say these are bullish candles because it's all intervention. Well, I say that you can. In fact, I don't think there's anything wrong with that. When you're studying a chart, you're studying price action. You're studying what? The actions of all the people involved in the market. Well, I would argue that the SNB, or Swiss National Bank, or central banks in general, are a pretty big participant in those, in the determinant of market prices. Okay, and looking at the chart, if you didn't know anything about what's going on, you just looked at this chart, you would say, well, seems to me like there's some pretty big demand down here. Okay, there's some pretty big buying pressure. And by the way, if we're talking about yearly reversal levels, perhaps this would be one to watch. The close for 2011 is 93.78. So that could be a level to watch for as we go into 2016. Okay, so in any case, yeah, I have no problem looking at this chart in that in that vein and saying that yeah, sure, SMB intervention, I get that, but it's not a bad thing. Don't you want the central bank on your side? As you get into the trade or have a long-term idea like this. Okay, so that's what we'd be looking at. That's the long-term picture of dollar Swiss. Probably the most interesting one. I guess if you combined these two charts of dollar Swiss and this huge low that appears to be trying to form or has formed, and you look at dollar yen, which is at that massive long-term trend line, then Swiss yen short might be the trade of a lifetime. Okay, basically. Is one way to put it. Okay, the problem, of course, there is you don't know if dollar yen's going to hold. Dollar yen could break through this and continue higher. You'd have a massive breakout, right? So in any case, I would, more than likely, probably just trade them separately. But let's move on. Okay, so go to the daily majors. First, we'll start with the dollar. So here's the US dollar index. It's been to say it's a difficult environment is not doing it justice. It's been really difficult. But the supports that we had down here. So you get this latest sell-off, the outside week reversal, week after a breakout, and then it's reversed, and then you consolidate. Instead of breaking higher, you break lower. You expect the break lower to carry to support, especially since the top up here didn't make it to resistance. In fact, wouldn't be surprised if you broke support. Well, instead, we didn't go to support. We just reversed more or less in the middle of nowhere as far as slopes are concerned. You did have some horizontal stuff over here, okay, as far as former highs are concerned. But yeah, pull back, and now here we are right back at the highs. Okay, so, I still think that the big resistance is up here, as it has been for several years. Okay, right? Lots and lots and lots of fairly important tops, at least tradable tops, okay, on this area. All right. Does it get there? I don't know. Down here, I was expecting us to get to support before you wanted to really turn dollar bullish. Up here, I was expecting us to get to resistance before you wanted to turn dollar bearish. Instead, we've just kind of compressed. So, there's really very little for me to say at this point about this other than know that resistance is higher, okay, and know that support is down here and we never got to it. So, would respect potential for a run up towards these levels. It's really all I have to kind of say about that. But in the meantime, you can do a whole lot of stuff. We can trade within a range, okay? You can trade within a range from November, okay? We've pulled back. You could be in a big drawn out triangle that ends up getting support at a later date before something significant does happen. All right, so very, very unclear picture right now as far as the US dollar and its intentions, at least the way I see it. Okay, let's look at euro. I still think that it's worth, we're at support now on the short term, right? 108, talked about that. And we'll talk about it with the short term charts here in a little bit. But I would still watch, or keep at least an eye on this line here, okay, which it goes back a long, long, long time as far as being support and resistance at important inflection points. This is similar to, right? We were long some euro and we had resistance very well defined up around 111. Idea was to take it up there and then short. You got the reversal 2 days ago. We did trade 109.80, and here we are now back here. So it's the right idea to be short. I'm just not a fan of leaving orders sitting in front of FOMC or anything else. But the idea was there. In this case, we're support now. The next one, if we don't really hold 108, in my opinion, is probably about 106.90, which again, you have a high up there, okay, from 11.25, and you've also got the so-called golden line, which has been, a pretty big deal on a number of occasions, including, over the last 2 to 3 months. All right. We'll look at the short term here in a bit to see what levels, would be resistance if we're going to get down to that area. But for now, we'll move on to some other dailies. I see Raj just asked about pound dollar, and yeah, I'm not too sure about pound at this point. Obviously, the weekly reversal that we did put in no longer, as we've broken the lows here today. To be, dead honest, I don't have any idea on trading pound right here. I mean, it's tanked 1, 2, 4, 4 days in a row. We're below anything and everything that I would be looking to trade on, specifically 149.50, which was the close down here on the 2nd. Okay, we had an early month low in place, usually a good sign. Weekly reversal, usually a good sign. Weekly reversal resistance over here from the long-term, picture. We had long-term slope. All these things lined up. and pound just hasn't worked out. So, if gun to my head, and if I'm forcing something because I want to, give you something, I would tell you that this line down here, the lower parallel, okay, which was resistance, or sorry, it was support down here. That's a level that I would look for, I guess, and that's obviously quite a bit lower at this point. So, if we zoom in and take a look at a shorter term picture on British pounds, was this little trick breakout here in which we held support. It was no good. We're back within the slope. I'd continue to follow this, and I'd look for resistance at the same spots, right? So this line here, okay, which was resistance, support, resistance on FOMC. I would continue to look there. You got a former low right here, 150.30. That could come into play. Okay, so there's a former low here at 49.90. So levels that we were looking at for support before are actually the levels now that I think you'd actually look at for resistance. Okay, I'm not going to be selling pound dollar down here at the lows. Bounce into support, or sorry, into resistance, and maybe it's an option to take it lower. But at this point, just kind of wait and see, observe, think clearly. The commodity currencies to me are some of the more interesting ones on the dailies right now. So Aussie dollar, we're actually getting really close to a big spot in my opinion. You see this line here, which was, trend line, but it was actually pretty good resistance and then turn support. That line's coming up, basically just below today's low. You've got the trend line that extends off of lows back in September as well as November, also around this area, okay? And then the next level would be this trend line here. We have failed, again, continually at the very long-term slope lines, which is keeping Aussie dollar pressure on the downside. Something that might be of interest will be Euro Aussie on the upside, actually, with Euro coming into possible support around 108, and Aussie, basically failing at these long-term levels and, seeing risk of another run at the lows. Grand scheme of things, this is just a range at this point. Interesting from Gary. Gary talking about the UK typically following the US rate, or the US on rates. Likely the economy will do a U-turn, look to increase rates early. Yeah, so that would actually fit with us looking for support in the UK, looking for support at 143.90 in pound dollar, right? And 143.90 again was the close of 2009, which was the low year for the move. So it might be worth looking at. Kiwi dollar, been sharing this chart a lot over the last couple of updates, and we have pulled off substantially. Here's the long-term median line, and there we go. So pulling off sharply. This is one short-term picture that we'll look at for resistance to take it lower, because I do see more downside potential here. It's a much cleaner chart than Aussie is. something I'd be looking at to trade over even this week or whatever. First support's probably going to be this line here. Could be former resistance support. Even that would be a little lower on 66.60. You can see that there's an intersection here basically tomorrow with a short-term support line. It's about 66.60. Okay. But that's one we'll look at a short-term chart here in a bit. Dollar yen. Interesting to see how we close today. Now again, BOJs tonight. We're kind of at the limits of resistance if this is going to pull back at all. This bearish slope extend to the parallel off the high. If we can maybe close back, if we can close maybe down in the 2240s or something, I'd feel okay about this trade. At least sending it back into support, near 121, 50, 121.70 even. We're basically trading right at resistance right here. So it's just kind of wait and see. You can see the bold level that's lined here. That's 122.81. That's actually weekly reversal resistance. And, so far we've held it. I mean, we're 10 pips off the high, but the high is 22.80 and we're at 22.70. Obviously, when you're looking at dollar yen and euro dollar these days, want an idea of what the indices are doing. The S&Ps retraced most of yesterday's rally. At one point today, it was down pretty much where we opened yesterday. Seasonality is bullish S&Ps into year end. In fact, we're doing basically the exact same thing that we did last year. Last year, we found a low on the 15th. This year, the low looks to be on the 14th. Right back into resistance, which was former support. Is obviously was thrown for a loop on this one. I was, wanted to see a little more capitulation on the downside. Seems to be the story of the last several years is like down days or even down weeks, seem to be marked by really shallow moves. You don't get much capitulation. I mean, we didn't even have high volume or high trend on this move lower. We did reverse at a perfect price level. We're looking at that 1991, 1993 area in SPX 500 and futures. It was a little different, of course. But the signs of capitulation weren't really there, but we got the J spike reversal, and since then it's been straight up. Support here, I'd look for it still back on this line, which is 2032 or so. And let's see if that would actually be a fib level. It might be pretty close. 2027 is the 618, 2037 is the 50. This low over here is 2035. So that would be an area to watch for support in the S&P. Okay. But again, putting in a bearish day here, so risk of pullback, in my opinion, before this does try to go higher. It's the same thing we've been saying. It's still a bull trend, especially since you found support here, but there's risk of, pullback here, which 2056, you could see what 20, 30 handles on the downside before you maybe try to pop higher again. Either way, it's nice to know that this is the right slope here. You can see this thing still works. That's why you keep this stuff on there. You can see how this old resistance, okay, ended up providing pretty good support on that move down this week. There's the S&P. All right, let's look at dollar Swiss. Wrote about it yesterday. The last 3 days, well, last 4 days touched it, but the last 3 days we dipped really, pretty well below the lower parallel support, closed above each day. That is a verbal explanation of support. And here we are getting back now into actually some sort of short-term resistance because this was support before. So 10030 is one level I'd look at. The big level is probably 10120s. You have the March high up there and the 61.8 retracement of the decline from the top is 101.20 as well. So that's a big spot. Short term, there is a nice fork to follow, as published last night, and we'll look at that after I get through with these dailies. Okay, so I think that's pretty much it for the dailies. I'm not even going to look at dollar CAD. There's really not much to look at. You know where we are. We're close to the 2004 high. We're above all those long-term slope lines. It's in the stratosphere. Not really going to comment on dollar CAD right now because I really can't add any value there at the moment. Okay, so short-term charts. All right, so here's Kiwi. Kiwi is one that I do like. Again, on the daily, looking lower, the first support, probably thinking around 66, 60 on the daily chart, okay? But since we're coming from that really long-term resistance, would be looking for resistance at a combination of short-term, maybe this median line here and this new parallel here, okay? They say, like, why am I following this one? Because he spiked above it. Well, I'm not going to pay a whole lot of attention to what, clearly was just a knee-jerk news reaction and spend a whole lot of time up there. And you can see how well this fork describes what's going on with Kiwi. Okay, there's a lot of touches around the median line, a lot of reactions around the median line. Okay, even right now, we just bounced and we're kind of testing the underside of the median line, which again was support. So this is an area right here that can provide some sort of an opportunity to maybe take this a little lower, okay, on a really short-term basis. On a swing, I'd be looking at shorting a little closer to, to up here, combination of former upslope, downslope, maybe looking at some horizontal levels in there as well. You've got a lot. This is probably too high at this point, but 67, 70s, 80s, probably a little too high. This one be about 67, 67, which would be more or less a retest of this morning's high up here. Okay, so that could be an interesting, option right there for Kiwi. Kiwi is one that I think is worth tracking. You could get a pretty deep pullback. Again, 65.80s could be interesting towards next week. You have the month open there. You've also got some longer term trend lines in there. And longer term, in this case, of course, only going back to September. All right, but bottom line, you do have signs of an impulse. So while I see downside potential for Kiwi for maybe 100 and 100 plus pips, maybe a little more, I do think there's going to be a bigger bullish opportunity in Kiwi as we get around to 2016. Okay, as we have short-term fluctuations showing impulsive rallies, corrective declines. Okay, so we'll be paying close attention to Kiwi moving forward. Okay, so that's one of the better short-term charts in my opinion. I see dollar yen's right back at 22.76. Screw this thing. Dollar yen, it's a big level. I'm expecting it to pull back here. And again, BOJ's later, but the support is going to be on this lower parallel. Okay, if there is a pullback, there might not be one. We opened the month at 23.05, so that's a level to watch for resistance, I guess. But if you get up there, there's nothing to sell on the downslope, so I wouldn't want to be personally involved. On the short side at that point, would be watching again for BOJ tonight, pullback. Just watch this really, really short-term structure. Okay, you could end up getting support on one of the levels down here. Aussie dollar, also a pretty good short-term structure. This is simply a modified shift fork. You're going basically a trend line off the highs, so you're creating more or less a channel, okay? And you can see the median line here was support, I guess this morning, No, it was yesterday morning, and then support last night during Asia. We broke it, so watch for resistance there now. It's around 70, about the former low too, around 71.60. Okay, that would be your level to watch for resistance at this point. It would be looking lower towards about 70, 40 region, which is a confluence of the short-term downward trending channel, downtrend support, and then of course you've got the trend line that extends back to the September lows, 9.6, 9.28. That puts you down in this region next week. Okay, so near term Aussie is a sell, just like Kiwi, a sell on bounces towards little lower levels before you'd start looking for more of a bounce. What else we got? Pound, kind of talked about that. CAD, crazy. Dollar yen, hate you. Euro Aussie is an interesting one. So we've got an impulse here, right? 1, 2, 3, 4, 5. Okay, we've got a pretty shallow pullback, and it would be classified, I guess, as a pennant right now. And you can see the channel that we just broke. Draw a parallel from the line that connects the highs, and we actually found support today on that. So this was a resistance line we broke this afternoon. We're actually testing it right now. So I'd be looking for support to come in pretty much right now in Euro Aussie. Okay. So if we can hold here the rest of the day, get some sort of a bounce, you might have an opportunity to take Euro Aussie a little higher. Again, rather trade the dollar crosses. So that would mean for me probably looking for Euro support to buy and Aussie resistance to sell. Aussie resistance to sell, as we just went through, does look to be a little higher. It's going to get up there at 71.50s or so. Euro dollar support, which we'll look at now, we're kind of there. Okay. So this was the chart you should be familiar with. Showed it the last couple days. The 108 area is big because there's so many measured levels around there. You had the low down here, wave 2 low, which after an extended first wave is often when you get support, right? So 1, 2, 3, 4, 5. It's not the prettiest thing in the world, but it does count. And normally you'd be looking for support the wave 4 low. Well, in this case, it's the wave 2 low. All right, the wave 2 low because the extended first wave. So that's where the pullback tends to go. So we're kind of there now. It's that low is 107.95. So the low we've made so far is like 108.03. We are on this support, downtrend support, trading around, I guess, a slope level that I would consider to be, pretty well defined. I mean, you've seen a lot of bounces and whatnot on the same slope before, including resistance on the uptrend up here. So, in kind of look for support mode in Euro, okay. Good thing to see is maybe a Friday low, maybe a dip down here and then a reversal during Europe or something. Be aware of that. But we're in the right area for, some sort of a bounce to materialize in Euro, at least on this hourly chart. And finally, dollar Swiss. It's a good looking short-term chart here. You can actually see this morning, that dollar rally peaked out really right at this thing. So at this point, I'd be watching for support around 99.30. That was the high volume breakdown day, okay, which of course was also the same level, if you will, for euro dollar, which is 109.40. So 109.40, which we looked for support, then once we broke it, we look for it as resistance. Same thing now with 99.30 on dollar Swiss. Okay, once you broke it to the upside, you look for it as support. In fact, it was support like 3 hours ago, the spike lower. Okay, so I'd be watching 99.30 as support, maybe a little bit below, just because the median line would come in slightly below there, and I would look to take dollar Swiss higher from here again, probably up toward 101.20 or so. All right, so dollar Swiss does look constructive. Okay, again, the 10030 region, former highs up here could end up providing some sort of resistance as well for a pullback. Okay, so there we have what we're looking at right now. I would, put the most tradable things at this point kind of on, the commodity currencies, selling Aussie, selling Kiwi on some strength. Dollar yen, we're at resistance now, but doesn't seem to really want to do anything other than sit at resistance or go higher. So that might not work out. Euro 108 area, we're there looking for it to try to stabilize around here. And if it does, you'd be watching the rally closely, because be watching for, potential how the market trades around here, 108, 50, 60s, which was resistance this morning, okay, on this line, and, as well as over here. So, far from clear as far as the dollar is concerned, in my opinion. I guess the biggest risk would be a dollar breakout to the upside. Okay, because we've tried so many times to break out to the upside. Eventually, one of these times, it's going to go. Okay, I don't think I can recall seeing this many tests of a level and the thing not finally. I thought it was going to happen in November, but it did not. Once we were pulling back, thought we were going to go to support. We did not. It's just been a very, very, very strange environment to trade in. But if you're worried about missing, say, a dollar breakout or something, then dollar Swiss on the upside is one of the better options, in my opinion. That's what I'm looking at as far as a long dollar trade as well. Something that could last a little longer than, say, the Aussie dollar and Kiwi dollar short side plays. Let's see here. Oh, there's some good questions. The crosses I actually wanted to look at. Yeah, thought a question on Aussie Kiwi. I do want to look at Aussie Yen real quick. So Aussie Yen. If we're going to, again, you do have, BOJs tonight. For all I know, to be stopped out of dollar yen before that thing happens. But if you're looking at, I'll go to a short-term chart. If you're looking at Aussie yen, okay, so basically looking at the same level, okay, as far as resistance is concerned, right? See if that median line comes in again. That would actually be about 87.70 or so, if we get up in there tonight. So that level to watch for, 87.70, take it down to about 85.40. It's a level to watch for, in my opinion, for Aussie yen. So I planned on talking about this. I'm glad someone reminded me. You have a good level here to look at as far as Aussie yen's concerned, 87.70. Obviously dollar yen's a total wild card with BOJ. I don't know if they're going to do anything. I'm not sure. I don't think a lot of people expect it, but that's exactly when they come out and do some crazy stuff. In October, everyone was talking about the BOJ. They didn't do anything, and dollar yen traded down and then ripped. Okay, it's like completely opposite of what everyone expected, which is usually how this stuff works. Aussie yen, all I can do is go by the charts, and 87.70. If there's going to be a continuation of weakness down towards the 85s, 87.70 looks like a place that you'd look for the market to kind of provide some selling. All right. So we'll look there tonight. I'll put this chart up in the post, of course. An Aussie Kiwi is an interesting chart too, because it's at, I think I tweeted this the other day, but we're at a pretty interesting support. Okay, just a simple trend line off of the lows from April, and in October puts you right here. And if this doesn't hold, I guess the next level you'd be looking at probably be down at this, downtrend channel, which would be a ways away. This is one of the opportunities that really could, I guess, materialize in 2016. You can see that this, could end up providing or forming a big head and shoulders, inverse head and shoulders pattern. Okay, going back, to January 2014. I say could because you just don't know. I mean, it looks great here, right? But this could morph into something else. You could trade in the long range. You could go to new lows. There's a lot of things. So if this is going to end up as some sort of a head and shoulders pattern, I think this is probably a pretty good spot for it to happen. So when I look at that, we look at Kiwi Yen, we broke that, but this Kiwi Yen chart would, potentially be more bearish than, say, just looking at, obviously this doesn't have any validity anymore, but this would be more, something to look at instead of Aussie Yen, okay? In other words, you'd be looking at this as maybe a false breakout to the upside. Right here. So just something to, again, to keep in mind as far as some of the yen crosses. Aussie Yen, looking for resistance, basically 30 pips higher, 87.70, but with Aussie Kiwi at big support, this is something might be lower probability, but, offers, it's going to take a lot, okay, to get this thing tanking, but it offers a higher reward to risk, in my opinion, than probably just Aussie Yen. Also, the risk, of course, that you go a little higher up to this level. It's old resistance. Old resistance, turned support, turned resistance before the crash. Let's see what's this look like if I just draw a modified shift. Not a lot to look at, in my opinion. Good thing about our method of analysis, you can spend a couple seconds on the chart, and if it's there, it's there. If it's not, it's just not there, and you forget about it. Don't try to force it, just forget about it, okay? Interesting chart to maybe follow over the next couple weeks into the new year. Let's look at, real quickly before I end this thing. Oh, euro pound, there was a question, euro pound. Yeah, so euro pound, the question was about entry for maybe longer term, because we're at the bottom of the range and we could be forming some sort of a low. So okay, if you look at the rally from the low down here, okay, obviously you're showing a lot of resistance up here with all these candles the last 4 days at this point. Short term, you do have some divergence going on. It's kind of the hallmark of a a bit of a fifth wave, if you will. So 5 waves up on the short term. So the point being is that the next decline would be kind of where you want to look at as far as as far as support is concerned. Okay, look for that 3-wave drop. And my inclination when you get something like this, you're at a major low, start with the modified shift and see if that's a good description of price action. Okay, so what that means is basically you're just drawing a trend line across the lows. And does that have any descriptive power? At this point, I wouldn't really say it does. Okay. There is not, at this point, I don't see an upslope to really work with. I thought we had one back a couple months ago when we had this. That obviously, went away after we broke right here. That was support. You remember back here at the end of October, then we broke it. So, nothing to work with on an upslope here, but there is obviously plenty of downslope stuff to work with. And so you still want to look at resistance here, resistance here. All right. You can see that the median line here has actually been pretty useful. Okay, it was support before the breakdown. It was resistance recently, a little bit minor. It was support again on this pull higher. So this is the area that I'd be watching for some support. Okay, former high right here, and if it trickles down, you could end up at lower levels. But this is basically the level I would, I'm have in mind as potential support. Okay, anywhere from 71.60 to 71.95 or so. All right. And of course, it depends on what the nature of the decline looks like. If it's slow and methodical and choppy and corrective, it could take a while, but you could end up, down near 71.60 or so at some point in January. Another thing to do, you can draw the short-term ones. Where you look for support to come back into a median line, that was broken out of, where you wouldn't think to look at this because you never really spent much time around it and trading on it. But a lot of times this is the original slope. A lot of times this will come back into play, right? These are the building blocks for the rally that's coming. It might be something to watch. You can already see it happening. If you go off this high at 11.24, you've got support here at the upper parallel, which after it was broken through was support, 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 support. It was even support today. So those are things to watch as far as Euro Pound's concerned. Euro CAD, your question was? I think I actually have a Euro CAD chart on a different platform at the moment. Let's see here. This is the long-term chart, obviously. The low that we had just made was actually right on, crazy enough. Year open price of 40.35. It's right there, 7 pips difference. If you scroll back, you can see we're basically at some resistance right here. The support that I'd be watching for moving forward, kind of, on the median line that you've traded around for years and years and years. Probably a little cleaner on this chart, actually. So you can see we actually touched it or pulled back to it this week. If I go to a daily chart, you can see it. So yeah, we pulled back to it today. So this is the line, median line here. This is one where you could literally draw a line across the low there, and that's your kind of bullish invalidation, in my opinion. You're looking higher as long as that prices above there, which is 49.40. Obviously, you have the horizontal level here. Daily reversal level would be a level to target up at 54.18. So, here we are about 151, call it 49.40, 160 pips downside risk. Breakout would target about 54.15 or so for, you can see, the former resistance around this level, really where we broke down from as well back in October, and then broke above, and then you can see it's holding support. 2 of the last 3 days we've hit that level. Okay, so it'd be looking higher. Okay, so wrapping it up here, we'll get this out archived so that you guys can watch it. Look at those. In the beginning of the webinar, we went through the really long-term charts. One of my favorite things to do is, towards the end of the year is look at those long-term charts. Again, cuts through the noise, gives you a sense of possibilities. It's a good view of history. I know the dollar seems overheated, but in reality, the dollar could go a lot higher, being only really in the second year of its breakout. The question is, trading-wise, obviously, there's been such little in the way of pullback in the dollar, right? When you look at those yearly candles, it's so clear just how constant and complacent this move is, right? Compared to previous years, previous cycles in the bull, okay, in the dollar bull, where you had breakout, big down year, reset, then 3 more years up. Even then, you had big declines intra-year, okay? In the 1980s, which was an insane bull market in the dollar, you had huge declines, okay? And the market, ended the year, nowhere near the highs. And then once you got towards the end of the move, that's when you kind of had the hallmark of exhaustion bars, right? Where you close up right at the high of the bar, okay? We have had hardly any pullback, right? We've gone sideways, so you could say we've corrected in time, but as far as price, hardly at all. So for me, that's why I think some of the most interesting charts to look at going into the end of the year is like this dollar CAD chart, right? If dollar CAD can pull back and end the year down, near the, looking at arithmetic chart, down near 36.60, indicating some sort of exhaustion, then that starts the year off on a note where you could get a move down towards the 130, 131 region. All right. Dollar yen, same thing. Dollar yen can finish down near where we open the year, right, and really hold this resistance. Okay. That starts off the year for dollar yen on a negative note, looking lower. Okay. Dollar Swiss, one that looks like it's really long-term bottoming. You would be looking at support going into the new year at about 93.80 or so, which is the close from 2011. And then pound dollar, 43.90, huge support, close from back in 1985. Okay. And then euro dollar, of course, no secret to us. Euros at support on downtrend on log scale, and on arithmetic, it's at support on an upward sloping 30-year trend line. So we're ending the year at some really interesting levels, to say the least, in the dollar pairs, with just gigantic decisions to be made on what these markets are going to do heading into the new year. All right. On the upside for dollar, I think dollar Swiss is your play. On the downside, the big move might be some sort of a mean reversion in dollar CAD. Okay. All right, so I'm going to end it there. Just wanted to quickly review the crazy long-term yearly charts. Hope you guys enjoy it. And other than that, have a great rest of your week. We'll look at doing a webinar We'll probably try to do something next week. I know next week obviously is a short trading week, um, but we'll look at doing something next Wednesday, before Christmas, of course. So that way I can wish everybody a Merry Christmas. All right. Okay. So everyone take care. Have a great rest of your week and a good weekend too. Okay. All right. Take care. Bye.